All right. Ambareesh Baliga also joins in from Edelweiss Financial Services. Ambareesh, hi, afternoon.
Good afternoon.
You manage quite a bit of wealth for HNIs, and you have a pulse of what they are doing in the market right now. We've spoken about FIIs, we've spoken about the domestic investors. What are the HNIs doing in a market like this right now?
HNIs are, at least our clients, we have been telling them that to stay as liquid as possible, invest only in short term, because possibly over the next 2 or 3 months, we'll get a lot of opportunities in the panic sort of a situation to buy your, whatever investments, whether it's equity or debt, at possibly much lower levels than where it is right now, including property, because we also tend to see that there could be some further panic in property prices also, especially if you're talking of like Mumbai and Delhi. So I think it's time to just hold on to liquidity and wait for opportunities at much lower levels. And as far as markets are concerned, this is what I've been saying for quite a while. Upside for the markets is limited. Any sort of rally which you see should be utilized to exit. Even last Thursday also I said that possibly closer to 5100 levels, I think that should be the top for the market for the time being, and people should be exiting at it, and it's worked out, like I said. And even now I feel that once we see levels of closer to 5200 levels, we could see one more bounce back. If you have missed out in the earlier rally, possibly utilize the next rally to exit, because markets are not going to get into a bull run at least for a while now.
Okay, Ambareesh, hi, afternoon. What is your view on hi, afternoon. What is your view on how long this market rout will continue because of the NSCL payout issues? I mean, do you think as long as the NSCL payout issues continue, then the equity markets will also suffer, because a lot of the funds or there may be sort of apathy of funds to put back into the equity markets?
NSCL, I think, is only one part of the problem. I don't think that's the whole problem for the markets, because rest of it is basically the policy measures of the government, where we are not seeing any concrete steps as far as the government is concerned. And again, we don't have a handle on the rupee. Every time we try to talk up the rupee, it just moves up for a day or two and then again starts sliding down. So unless these things are handled, I don't really see the markets really taking a cue and starting to move up from these levels. And the way I see it is, I really don't see it like a long-term solution, at least till the elections, till you have a new government in place. Till then, I think it will be just ad hoc sort of solutions which will be coming from the government or the RBI.
Mr. Dosian, what's your call? How much of this could be NSCL related? Could there still be some incremental selling because of that? And is there anything else, technical factor as well, which could be impacting the market right now?
See, Anuj, it is very difficult to give the clear picture, but my view, which I have been taking from 4th August, when this we have seen the crisis coming in, that I have seen this entire round tripping of 5,500 crore having done. What you gather from the market sources, that the money which has come from 13,000 investors and have gone to those 26 to 28 companies, they are all dummy companies, Benami companies, and all that money are the round tripping of the funds. And if you really go by the unconfirmed sources, that majority of the funds have been deployed in the security market and the currency market, it's very difficult to take a call. So now the liquidations of those, and in fact that's what I have been maintaining, that yes, the liquidation of the stocks which we are seeing. I recall when we have this kind of problem in case of Sahara, where the Supreme Court ordered the Sahara to deposit the 5,000 crore. At that time also we have seen the huge selling coming in. I'm not able to I'm not able to support that, whether those are, you can really connect those sellings by the circles close to these managements or not, or these people or not. So similar situation is happening here. Probably the fund, because government is very firm that government is insisting upon. That's the reason no serious actions have really been taken against the promoter. Now you just have 2 directors on the financial technology which they cannot resign, and in spite of that, if you see a small scam or a theft happening of 1 crore, you see the culprits getting immediately arrested and they are all just roaming scot free. So yes, things are, government is interested that yes, the money should be mobilized mobilized or recovered from them, and at least 50% of the amount gets paid, if not immediately, but over maybe next couple 2 to 3 months. So probably the things this selling also maybe has to do with that. And unless until we see some definite proposal coming in from those people in regard to the repayment of the 13,000 investors, this probably weakness may continue for some time. Yeah.
Okay, we have about 10 more minutes to go, so we'll close below the 5300 level for sure. 5291, maybe an adjustment we might get there, but there's been no recovery at all after that huge downslide that we saw throughout the day. So Darshan, I know there's no level that's sacrosanct at this point, but at what point do you think this trend might turn? A move above what level will convince you that perhaps a bottom has been put into place?
Oh no, Sonia. Today's, it's not, we don't have levels above which this downtrend will stop. Though I don't think it's relevant today. Much more easier is to say that when the decline stops and the fall stems, some kind of bases start getting built, the lower, say higher highs, higher lows, double bottoms, the clear visible patterns that there is no more decline, that the market is setting up for a reversal. That will be the time when we will be upbeat and bullish, and I'm assuming that time will also come. But suppose I were to say 5500, because 5500 has been a strong resistance level. The Nifty can easily go to 5500 and then continue its bear market, which it has done earlier also. So it's not about levels, it's about stopping this bear market. That will need time.
Ambareesh, the problem with buying, high pedigree, beaten down stocks is, the best example is IDFC. I mean, it was one of the worst Nifty performers, and had fallen 9% yesterday as well, is now at multi-year lows, and with today's fall is down 55% for the year. Good promoter pedigree, good space to be in. I mean, maybe not in the current economy, but the point here is how do you go out and buy stocks when you have a situation like this, when even if you buy at say 30-40% lower, you actually end up making losses.
Right. See, I mean, if you're talking of IDFC, even 3 days back, it was a good buy, no doubt. I mean, if you look at the valuation, even today it seems an extremely good buy. But can it go down another 20% from here? Possibly yes, looking at the way the markets are. So basically, someone buying it today should really have a wherewithal of holding the stock and not really panicking when the stock goes down another 20% from here, and should have liquidity to buy more at those levels. I think it's meant only for such people and not for those people who would panic when they see the market down another 10% from here.
Okay, just to discuss more stocks with you, Ambareesh, we were speaking with FNC Investments a while back, and they indicated that this would be a good time to buy some of these good quality banking names like HDFC Bank, maybe even HDFC at this point. These twins, would you look at them at this point, or do you think you could get better levels?
No, like I said, since I look at the market still going on further, and most of these over-owned stocks, especially over-owned by the FIIs, I think you could see some further liquidation, and there's hardly any buying from the domestic players. So I don't think it's really worthwhile talking of valuations and based on valuations buying at this point of time. So I think it's better to wait for a while longer, because when you see more pain in the system, I think most of these stocks you'll still get it cheaper. I mean, although you may actually find it extremely worthwhile right now, but looking at the ground level situation, I think it's best to, best to wait out than try to be brave in this market.
All right, in the last 5 minutes, one interesting thing has happened. TCS has slipped into the red, and in fact in last 1 hour TCS has fallen 3%. So let's pull out the intraday chart of TCS. Look at that steep slide that's happened from day's high, and TCS is not alone. HCL Tech is about to slip into the red. If you see the intraday high of HCL Tech, it was I think 960 or something, and now at 940, that's also almost in the red. Infosys is still holding on, 3064 on Infosys, so that one is still holding higher, but from 3080 not fallen too much, but clearly there is some profit booking which is happening on IT stocks now. Sudarshan, how would you approach an Infosys, an HCL Tech, a TCS? Is there a sense that at least there is some protection here, and maybe if the market has to reverse, these stocks could also lead on the way up as well? I mean, after having already defied this market trend, could these be the stocks which could lead any kind of recovery in the market?
No, There is no sense at all. These stocks have defied gravity, and they've done their bit. If this market will go up, it will go up on the back of banks, not IT stocks. IT stocks are likely to underperform. This is an excellent time to get out of them. If you have them as a short-term trader, then you get out of these stocks and wait patiently for them to begin a correction. They will do so. So I wouldn't go and buy them. I would, on a short-term basis, if I own them, I would get out.
Ambareesh, what do you think could be the next step from the RBI now? I mean, there are some analysts who believe that perhaps the RBI could go ahead and reverse its monetary tightening stance in order to sort of, improve the sentiment in the market, spur some growth, etc. What do you think the next step could be?
I mean, clearly, I don't think they will try and control the rupee, which they really can't. So I think they'll give up on that and possibly look at some sort of measures to induce growth in the economy. And I suppose that can only happen if they can possibly cut rates. I really don't know as to how far it's feasible for them to actually go out and cut rates at this point of time. But I think that's the only way out if you want to really spur the economy.
Meanwhile, we had the news flashing on the yellow ticker just about 10 minutes back. This was CNBC TV18 exclusive. Sources saying that FIPB will be considering the Mylan investment in Strides Arcolab today. Look at the intraday chart of Strides Arcolab in a weak market. That stock is up, I think, 6% or so. I mean, from the lows, it's up 6% or so. Is up 4% right now. So that's the one that you maybe got to track. Mr. Tulsian, I think you tracked this one quite closely. We were all struggling that, in a scenario where we're struggling for dollars, why are we not clearing some of these deals? If it goes through materially, how much positive it is, and can Strides go up even further from here?
See, Anuj, it's a very big positive because you will straight away have $1.6 billion, and in fact sometimes I feel happy that the deal got delayed, because if the deal would have been cleared about 3 months back, probably the Stride promoters would have gone a level rate of about maybe 55 rupees. So now straight away $1.6 billion will be coming in. I'm not calculating the $250 million, which will be subject to conditions, meeting the conditions. And now the Stride Arcolab promoters have said that they will be utilizing this amount for retiring the debt, and they will be going for a huge special dividend, because there is not much of the debt component. This Agila specialties, which is being given to Mylan, will take away 70% of their business, but they have the debt of closer to 11-1200 crore, about 2,500 crore, and they've talked of giving a hefty dividend of about maybe 600 to 750 rupees. So yes, if it gets cleared, probably the stock can breach or maybe can kiss the 4-digit marks.
Okay, we just have about 1 more minute to go, so let's wrap up the day's trading action. It has been one of the worst days we've seen in a very long time for the market. So 600 points gone. Actually, we saw one about a week ago. So 600 points gone.
Yeah, it will be lowest level since 6 September 12. If it closes below 53.02, Sonia, just a point.
Okay, so actually for now it's below 5300. Let's see on adjustment whether it does close below that level, but that's a crucial level, like you pointed out. There were a couple of reasons for the fall today. When we started off trade, most emerging markets were under pressure. There was the food security bill, crude was on the boil as well, and we did see that big sell figure that came out from FI. So watch out for the FI numbers tomorrow. The big cracks coming in this afternoon, the entire financial space. IDFC has been the one with the deepest gash. So it's down about 16% in one trading session. It's already lost almost 30% in this series. So that's been the biggest loser. And then you have a lot of these FII, bluest of blue chip names like HDFC Bank, even the L&Ts of the world. All of these stocks are down about 6 to 9% or so. In fact, apart from banks, it's capital goods that was under intense pressure today. So not just L&T, which is down 6%, but BHEL, that one has already lost 30% this month. It's down about 11% in today's trading session alone. So capital goods and banks were under quite a bit of pressure. Apart from that, a lot of high beta names. So it was a secular move on the downside, but we're just listing out the big losers. JP Associates, DLF, etc. down about 5 to 10% and names like Tata Power, NMDC, etc. are also down about 5% apiece. The oil marketing companies have also been reacting on the downside because of the way the rupee has moved. So another 5-6% downtick is what they've seen. On the upside, actually there was hardly anything. There was an Infosys that moved up about 1%. HCL Tech just about managed to hold on to the green line, but then the worrying bit has been that some of these stocks intraday moved to the low point, so TCS slipped into the red, as Anuj was pointing out. But debilitating day for the markets. Volumes again high ahead of the expiry on Thursday. 3.8 lakh crores is how much we did, and I think the key takeaway from today is the rupee and the way it hit that 65 mark.
Indeed, Sonia, and you know what, we keep talking about the Nifty and the mid cap. Some of the non-Nifty large cap stocks or relatively large cap stocks had a bad day. Look at LIC Housing Finance. That's a 9,000 crore market cap company. That stock was down 7% in trade today. Look at Union Bank, 6,000 crore market cap bank. That was down close to 7%. Apart from that, of course, if you come down to Power Finance would also be in that category, 14,000 crore market cap company, losing about 10% of that. So a lot of these stocks have lost about 1,000, 1,500 crore, 2,000 crores in market cap in a single trading session after already having fallen about 20-30%. In terms of pure mid caps, you have Dena Bank, which was down about 6%, among some of the other non-index stocks which have fallen quite a bit, so that would be part of that list. IFCI was down about close to 5%, Ashok Leyland was down about 4%, but really right now the market doesn't care about these stocks. The market cares about the HDFC banks, the HDFCs, they have fallen, and of course the IT stocks where you've, at least today also you've seen quite a bit of resilience. TCS fell towards the end, but HCL Tech and Infosys managed to close in the green, so that's the space that maybe could be the next bear target. I mean, that's something that you got to keep in mind.
Yeah, we've been talking about that for a while as well, and you know, a lot of people in the last 6 months have been hanging on to L&T as well. I don't know whether L&T is the next one to be under pressure. I mean, the last 1 month has been quite debilitating for it. Ambareesh, just two checks on individual stocks. L&T, do you see a big slip below that 700 mark? And the other one from the capital goods space, BHEL, if there's any floor in place there?
I think both these have fallen decently well, especially BHEL. So I don't see too much more of a downside for BHEL from here. Maybe 95, 96 levels is, I think, should be the bottom for that. And as far as if you're talking of L&T, it should be about 625 to 640 should be the bottom for L&T. But then the question is, I mean, would we buy these now? I don't think. I think one should still wait a while longer. Because I mean, basically, even say for example, L&T comes down to 625. I think at that point of time also I'll possibly check out as to what is the ground level situation before really, I mean, heading out and buying that.
All right, Mr. Tulsi and Ambareesh and Sudarshan, thanks a lot for your time and taking us through this really difficult market closing. Some flashes on your screen. The Bank Nifty is actually at lowest level since January 2012.